For Session Update, I'm Shannon Lurkey. Senator Sandy Pappas, Representative Melissa Hortman, and supporters gave a press conference to discuss legislation that would require the State Board of Investment for Public Employee and Teacher Pension and Retirement Funds to evaluate fossil fuel investments. As of 2015, the Minnesota State Board of Investments invested $2 billion in the top 200 fossil fuel companies, while a recent study showed that New York's pension fund could have saved $5.3 billion if it had divested from fossil fuels 3 years ago. Here's that press conference.
I'd like to welcome you all to this press conference introducing Senate File 3198. The Senate file author is Senator Sandy Pappas. There is a companion bill in the House that is going to be introduced this afternoon, I believe, and that author is Representative Melissa Hortman. I would like to welcome Senator. Oh, I am Emily Moore, Emily Moore. I'm a member of Divest-Invest Minnesota, which is, we are a group of people concerned about the stability of our pensions with respect to investments in fossil fuels. So I'd like to welcome Senator Pappas.
Thank you very much, Emily. I'm Senator Sandy Pappas, President of the Senate, and currently Vice Chair of the Pensions Commission. At the legislature. I've been the previous chair of the Pension Commission. So I followed these issues for many years, and I'm also an avid environmentalist. So I started becoming concerned, and I met with some of the stakeholder groups about our investments and asked the State Board of Investment and our staff at the Pension Commission to work with myself and some of the groups you're going to hear from today to ask the State Board of Investment to really look into this issue of fossil fuel investment. And so they're being asked to prepare a report with respect to their management of the assets of public pension and retirement funds on the feasibility of divestment of companies that are involved in the exploration, production, development, transportation, or sale of fossil fuels. And we're asking them to give us that report by next year. But it's something they really should be doing anyway, because they really should be looking at what are safe investments for our pension funds. They have a very good record of making pragmatic investment decisions based on current and projected long-term profitability of publicly traded companies. But seeing an industry that's predicted to become less profitable because of the worldwide campaign to stem CO2 pollution in the atmosphere, this should really be a red flag to us. That should prompt important portfolio reexamination. These are environmentally destructive companies that profit from fossil fuels, and they could soon prove to be financially risky for us, thus the request that they do the report. Thank you.
Good afternoon. I'm Melissa Hortman, and the companion is in today's introductions. I should have grabbed the number from the House floor before I came over, but we can get that emailed out to folks. The reason why I'm co-authoring the bill in the Minnesota House is it's very important that the State Board of Investment look at the risk for the state's investments. And there's the climate issues, but there's also just prudent investing that militate an examination of how much of the state's money we have invested in fossil fuels. We know, for example, that fracking caused the coal industry to decline in prices. We know there's a glut of oil on the world market. And we know throughout history, the only thing we can predict about natural gas prices is that they are unpredictable. When you add to that the damage that fossil fuels are doing to the planet, and the fact that more than 196 nations have committed to take action to reducing carbon dioxide emissions, it makes it an especially critical time to take a look at the risk faced by Minnesota retirees through our investments in fossil fuel companies. Minnesota retirees depend on the financial strength and security of their pensions. Current employees should be able to depend on that security when they reach retirement age. As an increasing number of Minnesotans realize that potential stranded assets of the fossil fuel industry reserves may jeopardize their financial futures, they deserve peace of mind. And this bill is the first step in ensuring their financial security during retirement.
My name is Dagmar Romano. I'm a former state employee. I've worked for the state for 25 years. I'm now retired. I have 3 kids who are wonderful, and I have 4 grandkids who are also wonderful. And I've been really passionately involved in climate issues since retirement because I really care about the kids, and I really want to try to do all I can for a healthy and sustainable climate. Senate File 3198, calling for a report evaluating the pension investments by the State Board of Investment, is a necessary step in helping us understand how our pension dollars are invested, how solid the fund is moving forward, and also the risks that some of those investments may pose. I'm a single parent, and I depend on my retirement and my Social Security and pension checks. These monthly checks support me. They help my 3 children as they need it, and they go toward helping with college tuition for my grandchildren. Without the pension check, I couldn't stay afloat financially. I also think about younger state workers who've paid into the pension system and who should be able to rely on a secure pension system when they retire. Continued fossil fuel investments by the board will be risky for all of us, and even riskier for the younger workers' pensions as climate change becomes more severe. So I worry. I worry because the board has invested $22 billion in the top 200 fossil fuel companies. These are risky investments that can jeopardize the pension dollars that I and other retirees receive. I worry because over the last 5 years, the value of coal stocks has declined by 85%, and the value of oil and gas stocks has declined by 29%. I worry because people in the know, for example, people who wrote the Deloitte report, in February of this year, predicted that 35% of independent oil and gas companies are at, quotes, high risk of bankruptcy in 2016. I worry because the New York pension system, which is the 3rd largest in the country, would have had an additional $5.3 billion to give to its retirees had it divested from fossil fuel companies and put that money into clean energy. I worry because the state board has invested in companies like Rio Tinto and Mitsubishi, Exxon, and Chevron. These are environmentally destructive companies that profit from fossil fuels and are risky for us. I care about the climate future of our planet and feel that it is wrong to profit from companies that are destroying the planet. I want my pension dollars to support companies that care about our planet and that support a more sustainable future. Senator Pappas and Representative Hortman, thank you for your bill. The data and the information that are called for in Senate File 3198 will provide information that can guide us all, can guide the board, legislators, state employees, pension recipients, and interested citizens in moving forward. As the banner says, healthy pensions can contribute to a healthy climate, and to me that sounds like a win-win situation.
Thank you so much, all of you. In case there are those of you who are taking notes, Dagmar meant to say $2 billion. So it's $2 billion that we've invested in, that our State Board of Investment has in the top 200 companies. So my part right now is that I am here representing Veda Kanitz, who is a science teacher, a mother, and a grandmother. And in her role as a mother, she is with her daughter at the hospital today, so could not be here. But I also started as a chemistry teacher, and so I so much concur with what she is saying, and I want to go ahead and read her comments. We have a financial and moral obligation to divest our state pension funds from fossil fuels and invest them in renewable energy resources. Therefore, I urge the Minnesota legislature to support Senate File 3198. She goes on to say, I wouldn't want to do anything to jeopardize my pension, but this evaluation should help rather than hurt our bottom line. Also, preliminary S&P 500 index studies show that fossil fuel funds are underperforming and becoming more and more of a risky investment, while carbon-efficient companies are outperforming fossil fuels. This is S&P 500 index funds studies. Veda goes on to write about her job. Most importantly, I believe we have a moral obligation to leave a livable planet for our students and future generations. As a 9th grade science teacher, she says, I use peer-reviewed science to teach students the causes of climate change. Students know that there is unequivocal evidence that Earth's climate has changed, that the current changes cannot be explained using the natural drivers of climate change. In fact, the changes we are seeing can only be explained by the 40% increase in carbon dioxide that has largely occurred due to the burning of fossil fuels. Students also understand that changes here in Minnesota's climate have already caused an increase in extreme weather events, warming our lakes, the spread of Lyme's disease, worse allergy seasons, costly infrastructure damage, higher home insurance costs, and changing ecosystems right within our own state. Students know that the choices we make today will determine how severe changes will be. A business-as-usual scenario that allows carbon dioxide levels to more than double by the end of the century would be catastrophic to our only home, the Earth. Best estimates are that 80% of the fossil fuel reserves that are already established must be left in the ground. This will create a $27 trillion stranded assets deficit, making current investment in fossil fuels extremely unwise. Does that make sense to you? As educated, scientifically literate adults, we cannot continue to support the very companies that will cause our ruin. Our students deserve more from us. Our children and grandchildren and their grandchildren deserve more from us. Please join me, Veda says, and I concur, in supporting SF 3198. Thank you.
Hello, my name is Patty O'Keefe. I am the Fossil Fuel Divestment Coordinator with Minnesota 350, an organization working to build a climate movement in Minnesota. I'm also a member of Divest-Invest Minnesota, which is a citizen-led advocacy group that is supporting these bills and pushing the state of Minnesota to divest its pension funds from fossil fuels. Divest-Invest Minnesota is a movement of public employees, retirees, employees of state agencies, teachers, and ordinary citizens who are concerned about climate change and concerned about the stability of our pension funds. We are proud to be working with Senator Pappas and Representative Hortman and many other legislators to introduce bills that direct the State Board of Investment to submit a report evaluating their investments in fossil fuels and what impact that has on the financial health of our pension funds. This bill is a very sensible and pragmatic step. It's not only sensible and pragmatic, but it's timely and justified. The top 200 fossil fuel companies with the most reserves in coal, oil, and natural gas worldwide are the companies that are driving the climate crisis. They are contributing the most greenhouse gas emissions worldwide. And climate change is already having severe implications on human rights and human and ecological health. And we're investing billions of dollars in these companies, almost $2 billion. So for these reasons, we feel it is clearly unethical to be invested in these companies, and by being invested in them, we're profiting off of them. We feel that is unethical. In addition to this, fossil fuels are no longer a financially stable investment because of the declining profitability of the industry, cost competitiveness of renewables, and increasing global commitments to reduce greenhouse gas emissions. That is why it's so important that we study these current and future risks. We cannot be negligent or reckless with decisions that impact Minnesotans' finances after retirement when they need it the most. This study is a good long-term strategy. The public employees that Divest-Invest Minnesota works with depend on their pensions. They depend on them, and that's why they think that this legislation is worthwhile, and that's why they think divestment is a good idea. With these bills, we're asking that the Minnesota State Board of Investment do their due diligence to ensure that our pensions are protected in a carbon-constrained future. We hope that legislators will support our hardworking public employees and support our planet, and also lend their support to this legislation. Thank you.
Does anybody have any questions? I wanted to clarify that number you guys were talking, was that $2 billion, is that the amount that our SBI has invested in the top?
In the top 200 fossil fuel companies.
Okay.
Say that in there.
Yes, $2 billion that our State Board of Investment has invested in the top 200 fossil fuel companies.
And that's as of 2015.
And California has started with divestment of coal. I'm curious, when we're talking about fossil fuels for the purposes of this legislation, are we talking about oil, gas? How do you work that out?
All fossil fuels right now are proving to be a very risky investment. Right now, you're seeing under the Clean Power Plan, even though there's a temporary stay, widely expected to go into effect. The question is not whether, it's when and how. But the same profound changes will be coming in the transportation market. And right now we're totally dependent on petroleum in our U.S. transportation market. But as we see a move towards electrification and a shift towards self-driving cars, that's not a very stable investment either. And as I said before about natural gas, the only thing we know for sure about natural gas is nobody can predict the future price. So I think what we're asking for is just an intelligent review of all of the fossil fuel investments for the risk.
Sure. I'll just add that the California funds, CalPERS and CalSTRS, are the largest funds in the country, the largest pension funds in the country. And they are starting with coal and tar sands or oil sands divestment, I believe. And I think they went with those just because they saw the largest declining profitability in those areas. But I think there are advocates that are still pushing for them to divest from other oil companies and from natural gas as well.
And in yesterday's New York Times reported that the Rockefeller Foundation will be divesting completely from, I believe, all oil. And I'm not sure if it was fossil fuels, but whatever the Sunday New York Times said about the Rockefeller Foundation, I think would be worth looking at.
I'm curious, where do you think this ends? Because we invest in other industries that could be seen as controversial, like firearms, and invest in foreign steel companies. So how do you anticipate taking this further with other industries down the line?
Well, this group is focusing on fossil fuels, but I think it's always prudent for any investment manager to be looking at both profitability for the pension fund and what future risks might be. So this is something I really feel that the State Board of Investment should be doing, whether we do this bill or not. And I'm actually confident that they are going to be looking at it. Certainly coal, we don't invest so much in coal, but at the others, as the years go by, it may seem profitable for a while, but you have to look into the future. Right.
All right, thanks everybody.
Thank you very much.